Good day, everyone, and welcome to my channel. If you are new here, before we start, kindly hit the like button and the subscribe, and let's get into the video. First, this is going to be a breakdown of what we're expecting in the market this week. My analysis is usually done from the weekly time frame. Start from there to get an overview of the market, and even a blind man can see it's bullish. Just need to feel the chart. You know that the market is bullish at the moment. Then we drop down to the daily. First, rather, let's look at what is going to happen. Higher low, higher high on the weekly. Remember, you must also read your price action from the weekly. So first you read from the weekly and then you now look at what the immediate candle is doing. So higher low, so the market is a high chance coming up here at the very least. Now, what's next? The market is now bullish. Okay, on the weekly, our bias is bullish on the weekly. We come down to the daily, and it's the same thing. Our bias is bullish. Now, we might expect a little bit of a retracement. If we get to somewhere here, it might retrace a bit to this zone. But overall, we're looking at a very bullish market. Now, we go down to the 4 hour. If you were on this channel last week, you see that for last week we were selling because the market was around here. Remember, like I said, you have to look at the long term and the short term. The short term trades, you just check what the market did or the market is currently doing and you take it. You are not holding it for long. But on the long term, we're expecting the market to buy. So that's what we're waiting for. Now, if you notice, the market is going up. My zone was here. This is where I set it because I wanted it to take out this high, which it did, and give me a clean pullback to this zone before I take the buy. So that has not yet happened. Instead, what happened was it did a retest here, started going up, came down again, did another retest, and then it's going up. Now, you must remember, there are two things I'm looking at. The market does not move in one single structure. The market moves in two different ways, in three ways rather. So there's the ranging market and there's the trending market. In the trending market, there are different patterns which the market move. So let me show you what I mean. And let's see. I think I already have this tool here. Yeah, I do. So you take this. There's the first pattern, which is this. So it's misbehaving. So there's the first pattern, which is what we normally look for. So the clean higher high, higher low, pull back to discount zone, go up, pull back down, go up. Now, rather, let me do it in a clear space. Sorry, so that you can see it more clearly. So this is normal pattern, which is higher high, higher low, higher high, higher low, higher high, higher low. So now this typically happens in the market. The market pull back down to discount zone and then it goes up. You take another trade. Now this shows a lot in the smaller time frame. So those that trade 1 hour or 15 minutes, you see it a lot more clearly there. Market pull back, you take an entry, it goes up, come back down, you take an entry, and this is what happens. Now the market also interchanges between this and this. Now what I just explained now is the difference between a supply and demand structure and a support and resistance structure. Remember I said there's a trending chart, there's a trending market and there's a ranging market. In the trending market there are two types, which people often make a mistake. They don't know the difference between supply and demand or support and resistance. Some people even say they are the same thing, but they are not. This is a supply and demand structure. This it's very simple. It goes up, pulls back down to a discount zone or a demand zone, goes back up. Pulls back down to a discount zone, goes back up. This is mainly either the 50 or the 60% Fibonacci. And sometimes it even goes to the 70. It goes from up here to this zone, then returns back up. That happens a lot also. So that is the support and the supply and demand structure rather. Now for the support and resistance structure, this is what we have. The market goes up, gets to a strong support zone, bounces there, returns back up. Gets to another strong support zone, bounces there, return back up. Now the main difference between the two of them is when this happens, we it doesn't give a lot of entries, but this is good when you are when you are trading a particular trend. So for example, we're currently bullish, and like we have seen here, it looks as if the market is changing. This zone that I marked out might not, the market might not come there. It might just go up, come back down a little bit like this before it flies up again. The good thing about a support and resistance structure rather than a supply and demand is it shows that there's a lot of momentum in the current trend. So if the trend is bullish, it shows that the buyers are in the market pushing it up very aggressively. That's the job of it. So when you enter, it's good to put in your proper lot. Like I said, don't over risk, but throw in a good amount of lot because the market is going to take some time before it gives you another entry. And that's what we are waiting for now. Now, those that are counter trend trading. So I'm sure there are a lot of people now that are saying if it's going to come back down to this zone, then they are going to take a sell from here and wait for it to get back here. Now that might not happen. Like I said, I don't study the news, but there are some things I use sometimes to tell me the overall trend of the market. So one of them is my relative strength meter or currency strength meter rather. But let's close this. My currency strength meter. So as you can see, AUD is the strongest pair in the market right now. AUD and NZD. USD is at a low, and GBP is relatively strong. It's actually strong. So in times like this, it is not a good idea to be selling GBP. Instead, you should wait for it to go back down. Like I said, it might not get to this zone because the trend might have changed to a support and resistance structure rather than a supply and demand. If that is the case, it's simply going to fall to maybe around this zone just to take out this support. As you see, this is a strong support zone. It might only come to this zone rather than falling to where we expect it to, and then it's going to go back up. So we are currently monitoring these two zones. Now, this trade might not play out today. If this video is on YouTube, which I think is going to be, then head over to either the shorts section or my TikTok. You are going to see me give an entry when that happens. Also head over to my Telegram and subscribe there. So if you like the video, kindly hit the subscribe button, hit the like button.